Tesla is up this morning, even as the rest of the market is down. Well, at least for now. But what we're going to cover, what did Jensen Huang, the CEO of Nvidia, say about Tesla and Elon Musk during his 2.5 hour interview with Joe Rogan? I pulled out the golden nuggets. Positive headlines galore overnight for Tesla. And shockingly enough, but the really, that's, getting a positive headline at all, but there was hundreds, dozens and dozens of very, very good headlines for Tesla overnight. And the most shocking part of all is that these headlines seem to be on point. The writers seem to actually get it for a change. Are we seeing any accidents or incidents in Austin right now? And we'll give a shocking initial jobless claims report that will blow your mind. I mean, there's always something going on. The two biggest issues for Tesla right now are robotic cars and humanoid robots. When will Tesla really blow up? When will the numbers really get big? Sawyer Merritt has this morning. He says GM CEO Mary Barra has revealed in a new interview that she privately told then President Joe Biden that Tesla deserved a lot of that credit that GM was getting for EVs and EV adoption. Well, it was nice of her, a lot of that credit, maybe all of the credit or most of the credit. He was actually crediting me. And I said, actually, I think a lot of that credit goes to Elon and Tesla. Barra said, well, it was nice of her to say it privately to the president, but maybe it would have been better if she'd said it publicly and missed all that embarrassing, all those embarrassing headlines. Yeah, it wasn't good. All right, Mario Knopfel has this morning that Jared Isaacman's mic drop on space policy. He says competition is great, but we better win. Jared Isaacman, the shift for billionaire and actually spacewalking legend, stared down the Senate panel that he was in front of yesterday, and he delivered the line of the year. He says, I absolutely agree with competition. I think we need competition for the vendors that support NASA's critical mission. I think competition among world powers is actually a really good thing, just as long as we don't lose. I can I can go along with that. This isn't just a hearing, it's a declaration of war on complacency. Isaacman is riding a wave. 36 astronauts just signed a love letter backing him. He's already offering to personally fund a telescope that NASA wants to kill. He's personally going to fund it. Forget sleepy NASA bureaucracy. This dude's about to turn the agency into a street race with Beijing in the rearview mirror. The Isaacman era is coming in hot, and losing to Isaacson is not an option. This morning, I checked with Grok to see if there have been any more accidents or incidents reported in Austin. Well, there were two in late September and one in October, including one of those three was another car hitting the Tesla in a rear ender. Another one involved a stationary object, and then one was in a parking lot. The last one, which was in October, was definitely new. The other two, dicey, not 100% sure whether those were new from previous articles. But the one in October was new, and that was the one in a parking lot. That was the only one reported in October that we can see. None reported in November that we can see. That sounds pretty good. But maybe I'll keep on asking or keep on looking. Now, Jensen Huang did an interview with Joe Rogan yesterday, and here are a few of the significant takeaways. He said almost everything, this quote, almost everything that Elon's part of, you really want to be a part of. Yeah, Jensen, we're in the same camp. He regrets not investing more in xAI, Musk's latest venture. He says that Tesla became Nvidia's quote first customer for AI autonomy tech, defying skeptics who saw EVs as a gimmick. Today, this fuels over $2 trillion in Tesla's market value since 2016. Huang highlights how Musk companies that could really use this mindset, how Tesla's real world data trains models, NVIDIA's chips power it, The lesson from it is that visionary leaders like Musk can spot applications that others miss, turning prototypes into entire industries. Huang gushed over Tesla's Optimus humanoid robots as AI's next big leap from digital chatbots to physical agents. Does he have any regrets? He says not betting bigger on Musk projects. Tesla's FSD is pioneering real-world AI, proving gradual progress beats hype. Huang's spin, AI's 100x capability jumps in 2 years, will fact-check itself, making 90% of future knowledge reliable. He says Elon Musk's crazy technology is what we all got to pay attention to. TipRanks has this morning. Here is an example. I said there were some examples. I mean, I can't tell you, dozens of headlines today mirroring what TipRanks is going to say here. TipRanks, a solid uptick in Tesla stock yesterday. And I'm thinking that maybe what TipRanks is saying, and we'll have a Barron's article, might be the key to a turnaround in their understanding and maybe for the understanding of the entire marketplace. Market reports suggest that U.S. government may issue a new executive order in 2026 to speed up the country's robotics industry. It's still unclear what the order could include or even if it'll even happen, but reports hint that it may focus on making it easier to build and sell robots in the U.S., while also shielding American companies from the growing competition in China. If this happens, it could benefit Tesla and its robotic plants. Jeff Lutz said last night he could imagine that there would just be an absolute zero, no, you can't import any of these robots from China for security reasons, rather than putting tariffs on them. For context, Optimus is a general-purpose humanoid robot being developed by Tesla. Optimus is part of Tesla's broader strategy to push beyond EVs into real-world robotics. Well, that's a miss right there. The EVs, the robotaxis, are real-world robotics. Notably, Tesla CEO Elon Musk has frequently highlighted robotics as the next major growth opportunity for the company, I would say for the world. Additionally, analyst Dan Levy, we talked about this yesterday, from Barclays, believes robotics is now a key area of rivalry between the U.S. and China. Levy noted that the companies want more federal funding and tax incentives to expand automation and supply chains. He also pointed out that stronger government support for robotics could increase investor interest in Tesla Optimus, which may reach commercial sales as early as next year. Then we had this from Barron's. Shares of Tesla gained 4.1% on Wednesday, helped by a research note from Barclays, and we just talked about. He wrote that the White House is considering a potential, we just talked about that. Robotics are increasingly seen as a major, well, is it going to say all the same things? Companies are looking for Fed funding / tax incentives for help on automation. Tesla is not looking for Fed tax incentives. Fed funding would be in the forms of orders. Sure, we'll take some orders from the federal government. They're looking for help in the supply chain for deployment. Increased government involvement on bots could spur excitement on Optimus bull case. Optimus is Tesla's humanoid robot. Tesla hopes to be selling them next year. But Optimus isn't for sale yet. There's no firm price, no cost, no demand data. That makes valuing the robot difficult for Wall Street. We infer economics based on Musk's comments regarding a $20,000 per unit cost and an assumed 50% gross margin. This is according to Baird analyst Ben Kallo, when he upgraded Tesla stock to a buy from his hold in September. He didn't go as far as projecting robot sales, but noted that Tesla has a lot of irons in the fire, expecting the company to hit on some of these AI moonshots. Kallo's price target for Tesla shares is now $548. RBC analyst Tom Narayan rates Tesla stock a buy and has a 500 price target for shares, which values Tesla at north of 1.5 trillion. He projects some 400 billion in robot sales, 400 billion in robot sales in 2050, valuing that as 10 times sales. Discounting that back works out to some 640 billion today, which means robots account for more than 1/3 of the Tesla valuation right now, which also is kind of what we've heard from Dan Ives said. He sees that same thing. Deutsche Bank analyst Edison Yu, actually a little higher, 1 trillion, he said, doesn't look out to 2050. He projects 1.25 million robots sold in 2035 for about $25,000 each. That's 31 billion in revenue. He puts a 30 times multiple on that revenue, calling that worth about $111 per share right now. You rates Tesla shares a buy and has a $470 price target for the stock. It's hard to project the path of robot sales when no one sells truly useful robots yet. Another thing investors can remember is that Musk recently adopted trillion-dollar pay package has a robot goal. Tesla needs to sell 1 million robots cumulatively by 2035. If things turn out like the most bullish analysts think, hitting that number will be easy. Here we go again with the hitting the numbers are easy thing. I certainly hope that hitting 400 billion in profits is easy because, yeah, that would make Tesla worth probably 16 trillion. This is Ray to Kirk, by the way. We're definitely in the business right now of selling books and selling robotaxi bottle openers. So if you want either one, look in the comments below. These are both amazing Christmas presents. Today is December 4th. It's time to buy. You are mostly men, and you know how terrible you are at finding gifts. This is a great gift for friends, but either one, for friends, for cohorts, for employees, for customers, and for family members. All right. Hit like. Thank you for the subscribes. Got lots more subscribes yesterday. Keep it going. You need to hit that subscribe button. And then, of course, notify. That's for you so that you'll be reminded of the next show. In the week ending November 29th, here we go. The advanced figure for seasonally adjusted initial claims was only 191,000. This is a decrease of 27,000 from the previous week's revised level, and this is the lowest level for initial claims since September 24th, 2022, when it was 189,000. And you have to go back into the 70s to find that again. The previous week's level was revised up by 2,000 from 216 to 218, but that's still a very, very low number. So 2 weeks in a row with extremely low numbers. The 4-week moving average was 214,000, a decrease of 9,500. And the previous week's average was revised up from 500 on that average. The advanced seasonally adjusted insured unemployment rate stuck, though, at 1.3%, where it has been, I can't remember when it wasn't 1.3%. Then this is the interesting one. The total number of continued weeks claimed for benefits in all program for the week ending November 15th was 1,822,000, an increase of 56,000 from the previous week. So that's showing that it's still hard to get another job if you lose the job you got. But the number of people that are losing their jobs is super, super low 2 weeks in a row. And this shockingly low number might be at least partially due to the fact that it was a 3-day week. So the reporting might have been different. And there were some people that pointed that out on X. But even if you take the 3-day week into consideration, no, we're talking about one time in the last 50 years that we had a number this low. So though it's a super low number and 2 weeks in a row that we've had low numbers. Reuters has this morning. The U.S. Federal Reserve will reduce its key interest rate by a 1/4 percent point at the December 9-10 policy meeting in order to support a cooler labor market. This is according to the majority over 100 economists that were surveyed by Reuters. That strong consensus broadly mirrored a November poll that nearly 85% chance of a cut implied by rate futures. But we're in sharp contrast to the growing division among policymakers over whether the Fed's largest economy needs another dose of easing next week. Following a 25 basis cut in October, Fed Chair Jerome Powell cautioned against inflation reigniting and said that it wasn't a foregone conclusion that there would be a cut in December. He says, The article says inflation has stayed above the Fed's 2% target rate. And that's true. I'll agree with that. It's above 2%. A 43-day government shutdown that stalled key economic data releases has added to the concern. Minutes from the October meeting also revealed a sharp split between the members of the Open Market Committee, some preferring to keep rates the same. Despite disagreements over both that decision and the path ahead, a markedly large 82% margin, 89 out of 108 economists think that there will be this reduction next week. New York Fed President John Williams recently joined Governors Michelle Bowman, Christopher Waller, and Stephen Moran in the rate cut camp. Williams says rates could be lowered without jeopardizing the inflation goal and would offer insurance against further labor market slippage. But as many as 5 of the 12 voting members have publicly voiced opposition to cutting rates further. We reported this last week, saying that there was a split 5-5, with just 2 that have not said how they're going to vote, which includes Powell. All right, so tomorrow we get the first PCE report in months, but what will it really be worth? It's going to be for September, not for October, not for November. It's going to be for September. So I'm not sure what we're going to learn from a PCE report that is 2 months old. But I can tell you what Trueflation is saying today, and it's showing that the overnight number dropped a little bit to 2.48. So you see, we're at 2.5. We are not down to 2%. And but we're not at 3 either, quite frankly. That's just incorrect. Goods inflation is only at 2.24%. Core inflation, 2.28%. Services, that's the one that's keeping us up, and it's between 60 and 70% of the economy. That's at 2.73, but that's, in a way, it's good news. That means that labor is outstripping, the labor costs are outstripping inflation, and that means real wages are going up. So wouldn't the Fed like to hold on to that part of what's going on? Maybe it's okay to be at 2.5, 2.7 if it means that real wages are going up. And then PCE at 2, this is a PCE equivalent, 2.15. Okay, I don't like it, and I don't really understand it, but Trump is down to 43% on Rasmussen. This will be the lowest point in the presidency. He's getting slammed for the economy and for inflation, yet it's obvious that both are doing way better if you believe Trueflation and the initial jobs reports for the last 2 weeks. Now, again, we got to take into consideration that it's getting harder to get a new job if you do get laid off or if you do quit. But we've also got solid real increases in wages, which the folks should be beginning to see that they got a little bit more left at the end of the month than they did a while ago, with real wages going up faster than inflation. All right, what do we got for the numbers? We've got Tesla still in the positive territory, but not as much as earlier. We were above 450 there for a while. We're now at 447.83, which is up 0.24%. The Dow is only down a teeny bit, down 0.01. It's been flirting. In fact, it just changed to 0.02 up. So it's flirting right with break even. Maybe that's going to be kind of the market today. Are they waiting for the PCE numbers tomorrow? Do they really care about the PCE numbers tomorrow? And the NASDAQ is down 0.21, just a little bit down. S&P also down 0.07, very flat right now, interestingly. We've got the Magnificent Seven basically down, except for Tesla, Nvidia, and Meta. Meta's up strongly this morning at 3.83. Must be some news there that I didn't see. The VIX is slightly up again now, but still sitting at 1645. It was well under 16 earlier. So maybe that report, the report on the initial jobless claims impacted, because you'll see it did impact the bond market. All right, we've got the Cathie Woods are now moving up. They were very mixed towards down, and now they're moving up rather strongly. I wonder if we're seeing that. We're still not seeing that with Tesla yet. Oh, it is ticking up. It's going in a positive direction. All right, let's go ahead and look at the bonds. The bonds are up 3.6 basis points to 4,094. So still not all the way up, back up to 4.11, which was the recent high, but not going the right direction in my humble opinion. All right, we got oil up 9 cents, so very flat there too. Natural gas down 2% at 4.895. Right, that's a right direction. Gold only up $2.50. A lot of flat, kind of flat today. Kind of not a lot of movement. We've got silver down 2%. Copper up, I'm sorry, down 0.33. We've got the dollar down for the 10th straight day, it says here. But the euro looks to me, it looks like the dollar's up a little bit against the euro. I'm sorry, up again. I'm sorry. Yeah, it says it's down against the yen. Anyway, the headline is definitely not corresponding to the numbers right there. Bitcoin up. I keep doing that. I need to change my glasses. No, the glasses wouldn't affect color, would it? Bitcoin down 581 at 92,510. So it is now bounced off. It was up around 93, 94. It's bounced off of that. But Ethereum continuing up 1.26 at 3.172. All right. So what am I going to leave you with this morning? You are going to love the rest of today because it's Bradford Ferguson followed by Sir Basher. It doesn't get any better than that. So we got to look for, hopefully you're looking forward to those two things, but that's why you hit notify. But you can't hit notify unless you hit subscribe. So please hit subscribe. Why haven't you done that yet? And then last night, uh, we had, yeah, what did we have? Oh, yeah, it was Jeff Lutz. Oh, yeah, yeah, yeah. You got to go see that one. Of course, my solo video that I did in the later hours there last night was outstanding. Of course it was. But no, you want to go. The Jeff Lutz video that we did last night might have been one of the best videos I've ever done. So I'm going to put that card up here. And that other one that I did later, yeah, if you got time, go look at it. But I'm going to put the card up for Jeff. I mean, seriously, maybe one of the best videos that we've ever done on this show. And it's getting good results, but if you didn't see it, you do take the time to go check that one out. All right, remember to buy one of these for your friend, only the people you care about. And the book, the people you really care about, because it'll help them make decisions about their future, because it's going to change really, really fast. That's all I got for you right now. It has been great talking to you.